Okay, hi guys. So today I'm going to be holding a presentation on the state of restaking in Web3. So the name of the presentation was "Stake It Till You Make It," and the idea behind that was that we are packaging these structured products, these restaked products, as some kind of mortgage-backed, almost mortgage-backed securities, where we don't even know what the underlying is. So in this case, here's a tweet from crypto Twitter that says, "May I interest you in EtherFi 7Cs, DUSD, USDE, USD0 Vault, and Mitosis restaked to Symbiotic restaked via receipt token to Karak YTs, 7-month maturity." Great yield, by the way. So we see that this trend, we'll come back to what restaking even is, but we see this trend where we package these structured products in such a way that it is not even legible to normal people or even finance people. So first of all, what is restaking? So this user asks can anybody explain to them what Eigenlayer does in one sentence and in layman's terms? And Sriram Kannan, the founder of Eigenlayer, says, using Eigenlayer or any restaked product in that matter, you can build arbitrary decentralized services with cryptoeconomic security. We'll go into detail what that means. So even this one sentence doesn't really get to the core of it, what restaking means. So Eigenlayer or restaking in general, but in this particular architecture, so explain it like M5. So Eigenlayer is like a multi-tool for the blockchain world that helps make other blockchain services stronger and more secure. What does that mean? So Eigenlayer allows the same security and validation resources that are used for securing the Ethereum validation or the Ethereum consensus to be used for other arbitrary off-chain computations or any computations. So in this case, resources multiple ways, making the blockchain more flexible and efficient. Okay. The ultimate goal of Eigenlayer or restake platform is to, as I said, reuse that security for validation. And that can be used also for on-chain as well as off-chain operations. It introduces this concept of restaking that we mentioned, which means using your already staked Ether. In this case, we'll later see that any ERC20 or other tokens could be used in such a manner. So first of all, we have the Ethereum validating pool, where the stakers stake their Ether, which is used for validating or securing the consensus of the Ethereum blockchain. So this Ether, while it is utilized in this staking paradigm and gets some, let's call it risk-free yield or the base yield that you can get in a DeFi environment, at least in the EVM ecosystem, it can be additionally used to secure additional services beyond that consensus validation or securing the consensus of Ethereum. So this is where Eigenlayer and other systems like Symbiotic or Karak come in, and they say, okay, we can use that staked Ether, and you can deposit it as collateral to be used in these AVS services, which are actively validated services, and they can be any arbitrary computation. So it can be bridges, oracles, it can be some DeFi products that depends on some off-chain computation that we need some trust or some way to verify or to slash in case of malicious behavior. And so we have these operators. The operators are the programs or the people who run these sensitive off-chain or on-chain operations. The stakers are those who deposit collateral, and they are staked in case of malicious behavior of the operators. And all this is to be used for any DeFi apps. So DeFi apps are on-chain apps in general, which combine the on-chain and off-chain elements. Okay, so this is another explanation, but I'll leave that for later. We'll go through the 4 levels of open innovation, as Eigenlayer puts it. So we have, first of all, we had the paradigm where we had one blockchain, and that blockchain, as let's say Bitcoin in this case, is the one which holds the ledger and secures all the actors in the system, secure the assets and the state of the blockchain. Then we have a progression from there where we are not only securing the assets which are stored on the blockchain and the transactions and the state, but also we expanded to we expand the functionality to have any program. So in this case, Ether, where we have smart contracts and any structured products which can but are not confined to financial use cases. On top of that, once we saw that the throughput and the amount of block space and the use cases with the flexibility of the L1 landscape or L1 layer wasn't enough, we expanded it to rollups, which have currently are not fully decentralized as compared to the L1s. I mean, some L1s are also not fully decentralized, but the usual ones we know as Bitcoin, Ethereum are at least at a sufficient level of decentralization. So we have a problem where rollups, which we depend more and more on for specific use cases and for reaching mass adoption because of lowered costs and heightened throughput for transactions, have centralized sequencers, for example. These sequencers are a part of the stack that define how blocks are included and how these batches are then posted to the L1. And these sequencers, mostly for now, are operated by the teams which develop the L2s. And so this is only one of the use cases where we see that we need some way, and this also I need to point out these sequences cannot live on chain or on the L1 blockchain, but they are operated beside the chain in an off-chain manner or in a manner where the other network has their own validators or something like that. So there we come to EigenLayer or other generalized restaking platforms where they enable the AVS services. So example, a sequencer could be an AVS service where it rents out cryptoeconomic security. So the same one that secured the L1 blockchain, let's say in this case Ethereum for the consensus. And it can also like secure this sequencer, and in case of malicious behavior, let's say malicious transaction ordering or something like that, they can be slashed. And so we have like a higher level of security or like a higher level of trust in these additional services, which depend not only on-chain but also on off-chain operations. So, so this is the same graph, more or less, the same diagram, where we see that we went from the security consensus execution and application stack on Bitcoin, where, okay, in the case of Bitcoin, the applications were scarce, but when we came to, or we could say that in the case of Bitcoin, the peer-to-peer cash electronic system is the application. But when it comes to Ethereum and other EVM environments or other smart contract-enabled environments, we see that we have multiple apps. And on the app layer, multiple functionalities, and then when we come to rollups, you have other execution environments. So this was the case with the L1s, L2s, and now L3s or whatever comes next. And with the restaking paradigm, we want to like decentralize it further or like diversify it further, where we have like not only the consensus from the L1 or maybe additional L1s or additional like networks. We also have these verifiable services. Then in the execution layer, where we have like sequencers on other apps for, let's say, data availability or something like that, and all this to enable like apps that can call upon a diverse set of consensus, execution, and app layers. So, se možemo pomjeriti malo da je nekako PDF scrollan. Da, ali za ono kad pomjerim. Tu. So, as we said, simplifies the process of building trust networks for complex systems, enables the creation of secure and efficient blockchain-based services. So, as we mentioned, these AVSs stand for actively validated services, so distributed systems, leveraging, in this case I wrote EigenLayer, but it can be also Karak, Symbiotic, or any other restake platform. And these represent like a new class, new enabled class of blockchain-based services. And as I said, they inherit various forms of trust, not only from Ethereum's robust network, but in the case of EigenLayer, they are pooling from the staked Ether pool, so the same pool of Ether that is securing the Ethereum consensus. So we have three types of programmable trust. The first is economic trust. So the validators make commitments backed by financial stakes, and that is the most common one we encounter today. And then it ensures accountability and incentivizes honest behavior, because in the case of like proven or verified malicious behavior, the staker or the restaker in this case will be slashed for his collateral, and which disincentivizes this behavior. So it is critical for services requiring strong economic guarantees. So that would be something like oracles or bridges, which where other financial applications or non-financial applications depend on it. So where they're not self-confined. So then we have decentralized trust, network operated by independent, geographically isolated operators. enhances security by reducing the risk of collusion or single points of failure, essential for services requiring high levels of censorship, resistance, and reliability. So this is also the case for L1 networks, but also for some networks like Oracle operators, where we need like a diverse set of dispersed operators or services, and the Ethereum inclusion trust. So the guarantee is that Ethereum validators will construct and include blocks as promised, leverages the security and reliability of the Ethereum network. So this is when we're speaking about a system that uses the staked Ether as mentioned. So we'll start with EigenLayer. So it is the biggest player in this restaking space, and it's really moving the goalpost for how this space looks, and we'll mostly talk about it. But when we're talking about EigenLayer, what it is, what it's possible to do with it, we're also talking about other restaking providers. So the purpose to expand the boundaries of decentralized trust in blockchain systems, as we said, with as well not only on-chain but off-chain compute. Novel concepts, we'll talk about them. One of the key components, as we said, is restaking. So it allows, in the case of EigenLayer concretely, to allow validators who staked the Ether or have a liquid staked Ether representation in an EVM environment, or ETH mainnet in this case, to secure multiple services. So we'll talk what these services can be, but they can be more than one at a time. So and it significantly enhances the capital efficiency of staked assets. So it means that the asset that is used for securing the Ethereum network can also be used for other off-chain securing other off-chain operations, or be used in other protocols. So not only can we use now the liquid staked representation, we can also use the liquid restaked representation, or just use the staked Ether in other operations, or in other use cases. So the Eigen token, maybe not the most important part, but it also directs the way the Eigen protocol is moving, because it wants to move away from only having fees as something that the operators can be compensated in. So it expands also the scope of governance beyond traditional on-chain mechanisms. Okay, that's pretty common in the DeFi space, but also introduces a new layer of community-driven decision making. It also enables rewards, or programmatic rewards, which can be on the protocol level, or when once the AVS, let's say, services have fulfilled some criteria, they can also stream these to other operators, to their operators, as they think it's appropriate. So the evolution of trust in blockchain, as we said in the diagram before, we had proof of work, then we had the general purpose computation, layer 2 solutions, and the EigenLayer or other generalized restaking platforms. Restaking concept, so it allows validators to use their staked ETH to secure multiple AVSs. Okay, implementation, we'll cover that later. So one of the interesting things that is new to EigenLayer is this concept of intersubjectivity, and this is where the Eigen token will come in play. So it refers to truths or situations. So first of all, what is intersubjectivity even? So it refers to truths or situations that cannot be definitely proven on-chain. So this is especially important when we are talking about off-chain operations or off-chain calculations, which are then submitted to an on-chain environment. Represents social truths that reasonable actors within the ecosystem can agree upon, and addresses the limitation of traditional blockchain systems in handling complex real-world scenarios. So one of the first use cases we can think of is Oracle problems. Let's say we have a prediction market, and we need to define what was the outcome of an election. And in this scenario, it wouldn't be something that we can verifiably prove with a calculation, but would need to depend on the social layer of arbitration to see what really happened. So EigenLayer's approach in this is to have the Eigen token specifically designed for this issue, and it allows it introduces this mechanism of community-driven dispute resolution, as I mentioned. So it doesn't. So in an example scenario, disputes over validator behavior were intentions rather than just actions are in questions. In such cases, pure on-chain data might not provide a complete picture, as we said. It allows the community to weigh in, to vote, and then on a combination of available facts and collective judgment. So this is something that's not yet fully defined by EigenLayer, but it would probably involve some kind of consensus with additional oracles or an arbitration system. So the two-token system, so not only is there the eigen token, but also the B eigen token. So the eigen token is the one we hear about. So it is used primarily for non-staking activities such as trading or participation in DeFi protocols, also for incentivization of AVS services. And it is not directly exposed to staking risks, providing a layer of protection for general token holders, also used for governance. And so that is the usual stuff we can like imagine when talking about tokens in DeFi protocols. But this B eigen token is something that's interesting. So it is a backing token specifically designed for staking within the EigenLayer system. It is like subject to staking rules and risks, same as restaked Ether would be. So including potential slashing or forking, represents a more active participation mechanism. So in the case of significant disputes or faults within the system, so where a lot of the system depends on a let's say, dispute where we have, as in this example of the election, we have these B eigen tokens that can be staked for either vote. So let's say in the case of the American elections, if Kamala or Trump won, and how to, let's say, how to resolve a polymarket like result. In that case, everybody would stake their tokens for one of these outcomes, and in the case of either A or B, one of the tokens would be deemed legitimate and would continue functioning as it is, while the other one would be forked or as in a way to put it, would be rendered valueless. So separate staking risks from general token usage, protecting casual users from governance-related risks. It is really an open question if that is really useful to have like a token that is not the backed one. The backed one is at least like an interesting experiment in like these forked token designs. But yeah, there's more like incentives for introducing a token that is like not really governance or really slashing related. Said, okay. So types of AVSs, standalone applications may eventually seek to operate independently of the EigenLayer ecosystem. So those are usually applications, let's say bridges or oracles, which don't have their cryptoeconomic security secured, or like don't have a system that is fully circular or like finished, and so they can opt into these restaked services to like rent this cryptoeconomic security for the time being. We have like the second kind, the foundational building blocks. So these benefit significantly from the interconnected demand. They find value in sharing revenue in exchange for ecosystem growth and shared security. So that is really useful for stuff where there's programmatic incentives or something where the composability of the DeFi ecosystem can come into play. So some challenges for AVSs is balancing the need for share revenue with ETH or Eigen against potential independent growth. So one of these issues is that such a service would have like a value proposition that is separate from the growth of the EigenLayer or any other restaked platform, and it remains to be seen how these ETH or let's say Eigen incentives that are streamed from the protocol to the AVS service, if they are value add to the ecosystem as a whole. And the advantages of EigenLayer, okay, access to a substantial pre-existing security pool. With pre-existing security pool, they mean the already staked Ether that is restaked through the EigenLayer. So a lot of Ether, I don't know the exact numbers, but it's a lot of Ether that was staked for securing the proof of stake network is already able to be used for any AVS services, and it removes this friction part where you can opt in besides earning the, let's call it, risk-free yield from the staking, to also get additional like rewards from these AVSs. Of course, additional risks apply. So some key takeaways here: it expands the scope of the trust in blockchain system of the decentralized trust, enhances capital efficiency. The two-token model, it remains to be seen, but could address intersubjective governance issues with this forking mechanism. Okay, so we'll just quickly go over some of the alternatives on the market. So Symbiotic Finance is also a shared security layer, enables users to participate as well in permissionless staking. The core architecture is not that different from EigenLayer, but they are at the AVS level or DSS level, as they call it. They enable more like programmatic like adjustments that can be used for where some of the, let's say, when we have multi-collateral system, multiple restaked assets, where they can be used for which AVS services, to which amount, and how much you are exposed to particular risks. So here we can see the architecture. It's very similar to the EigenLayer one, where we have like the restakers which put up collateral backing, and they opt into these AVS services or DSS services in the case of Symbiotic. And these operators like opt in. The operators opt into the network, and they run some infrastructure or any off-chain or on-chain service that can be challenged for slashing. Also, they are eligible for rewards. Okay, so this is also a diagram of the architecture. The users receive network rewards through these vaults. They also deposit them through them. So we only have like a different layer of abstraction between the operators and the users in these vaults. Karak network, universal restaking layer. They also have these distributed secure services, DSSs. They allow also to restakers to delegate their assets, so they deposit. The one interesting thing with Karak is that they have like a higher potential for composability, although they are not really live yet or like in a permissioned state. They operate on Ethereum and Arbitrum as of now, and one of the interesting things is that it's really already well integrated into some other DeFi protocols such as Pendle or like some stablecoin providers where you can like put up additional collateral which is not ETH based. Okay, this is some data from July of this year, where you can see that EigenLayer is the clear leader in the category, but also Symbiotic lately has been catching up, not at the pace of EigenLayer. And here, I don't know how well you can see it, but this is just the composition of the Ether that has been restaked in these platforms, where we can see that the wrapped staked Ether is the dominant one on all platforms, aside from Karak, which has like a more diversified portfolio of not only ETH-based assets, but assets such as USDC. Okay, let's skip over this one. The 5 categories created by EigenLayer. As I said, it doesn't only apply to EigenLayer, but they were the first movers, so they have the bragging rights. So, restaking lets anyone use economic security on demand, as we said. LRTs, so those are only liquid restake tokens, so they allow the tokens which are not only like staked and restaked, but also the restaked representation to then be liquid and used in other DeFi protocols as collateral or something like that. AVS services, as we mentioned, like they have like multiple like use cases. We are yet to see which use cases will stick the most and have the most sense. But some of the ones, as we mentioned, are like slashable oracles, restaked rollups, bridges, FHE computation, fully homomorphic encryption, some trusted execution environment committees, ZK verifiers, and so on. Hyperscale rollups, so rollups which can use and take advantage of data availability which is provided by a restaking platform. In this case, EigenDA is a project that has been developed by EigenLayer, and it is the AVS with the most restaked collateral, most restaked Ether at the moment. And apps with credible commitments, volume blockchains from platforms for code verifiable commitments, enabling credible commitments for any human agreeable facts. So the whole concept of this restaking is to enable not only to verify things that we can already verify on chain, where not only code is law, but to expand that to the wider ecosystem where we can use it in real life with these verified or at least slashable off-chain verifications or let's say off-chain operations which are then submitted on-chain for verification. Okay, so these are the 5 categories, as we mentioned, so commitments, some use cases, as we mentioned. Okay, this is just a graph from April of this year showing the pace of the TVL rise in eigenlayer. So we can see here well that eigenlayer had these deposit caps introduced for the protocol, as it had like a rollout in phases, where first they enabled like the restaking, then they onboarded the first AVS services, and now they are like hovering around 5 million Ether that is restaked. That's the data from April, so it's probably more by now, but we can see that it has these cascading jumps in TVL. So this is a comment on the shared security. They introduced an update where not only you can opt into multiple AVS services with your restaked collateral, but you can decide how much of each, so before each dollar of restaked assets can be restaked to multiple AVSs. After each dollar can be restaked to only one AVS. And so the question was, is restaking limited to only one restake? So two things to get the pooling effects. Pool security via total stake. Imagine 10 billions with all stakers staked equally across 100 AVSs, even though each AVS gets 100 million of a unique stake. However, it is possible to make the attack cost with new stake prohibitive, as more than 5 billion is necessary to take over the quorum. And bundling, someone can create a meta AVS contract, bundling a bunch of AVSs. In this way, if you opt into, you can be slashed by any AVS in the list. Also allows post-market bundling. So in this case, they outsourced this part of the unbundling, so this part of the bundling, so they are not like really liable for, they only allow you to like stake to one AVS asset, but they are open to making it possible to have some kind of aggregator which bundles these restaked assets for multiple AVS services. So this is only like permissionless token support to eigenlayer, just the comment that they're also moving not away from Ether as the sole collateral, but moving to enabling any ERC20 to be able for like restaking and slashing, also for rewards. So this is a part of the verifiable software as a service idea, or like a paradigm where we think about these services as extending smart contract boundaries. So interaction with off-chain services, where the process is emitting of events from smart contracts. So the contract signal needs for external data has a need for external data computation, and it picks up events off-chain. So external services monitor blockchain for relevant events and responses back on-chain and callbacks. Results are securely integrated or like committed back on the blockchain. Benefits: greater flexibility in the development, so enable services like, as I said, Oracle's core processors, other off-chain compute. Okay, this is more for developers, but high barrier to entry, requires both knowledge in on-chain and off-chain systems. Developing the system itself is complex, requiring also securing a new network, but that is something that these restake platforms are enabling, or at least the renting of the crypto economic security. So the AVS landscape, so there are 5 categories of AVSs, but also much more added, but some of these are like roll-up services and for enhancing and scaling Ethereum capabilities, for applied cryptography, as I mentioned with ZK and FHE, general decentralized networks, so such as for oracles, MEV, minor extractable value management, and also for AI inference. That's probably going to be a big use case in the future, because it can verifiably showcase how AIs behave in an off-chain environment. Let's say we can like commit and see and test, compare the capabilities of some AI models. So AVS character rollups, co-processors, cryptography proofs, and others. Some other also diagram. So the focus of this presentation was to like introduce first of all what restaking and the eigenlayer or other restaking platforms are, and to showcase what we can do for it in DeFi. So they call it intelligent DeFi, but we can like use the term like DeFi that can like make use of off-chain computation, of verifiable off-chain computation. So real-time adaptability, okay, powered by eigenlayer, AVSs, okay. So the first use case is like a VIP tier volume-based fee tiers. So the challenge is implementing volume-based fees on chain. The challenge is that it is expensive, so outsourcing computation to co-processors such as the Lagrange and Brevis, which are working on it. co-processors index and store blockchain data. AMMs call co-processors to calculate traders' fees, and then they return the verified results with ZK proofs. It also enables DEXs to be competitive and have a tiered fee structure. Use case 2, dynamic asymmetric fees for AMMs. So loss versus rebalancing, which affects the LP's profitability. So the solutions can be like dynamic fees, asymmetric fees, or implementation of ZK TLS, so web proofs for secure real-time external data, so a kind of oracle, and benefits which are like, the benefits are like improving LP profitability, so looking at it from another side, as opposed to the DEX user. MEV, redistribution action, so auction of the right to be the first up to the pool. The centralized set of operators runs a leaderless auction, recaptures most of the loss versus rebalancing, redistributes or distributes the proceeds to LPs. And in theory, it should enable tighter spreads. Advanced margin system, so the current limitation is the inability to express cross-asset viewpoints, so the solutions would be like leveraging co-processors for that, something that could like leverage verifiable off-chain computation. So in this case, account for multiple factors, collaterals, positions, P&Ls, and so, adjust the margins, consider real-time liquidity and open interest, and to enable like more complex or flexible strategies. Pricing and options AMM. So the challenge here is to accurately price and capital efficiency for options AMMs. Solution is to integrate off-chain data and compute. So, for example, to calculate something like IV, which is the implied volatility in options contracts. So include volatility, historical pricing, real-time market signals. Also can take use of co-processors, and as we mentioned, this IV the implied volatility is used in formulas such as Black-Scholes, which is used a lot in the options markets for pricing options. AI system for parameters. So this one is like really in the AI agent space, but it also, as most AI agents are not really fully on-chain, they require these off-chain or verifiable off-chain proofs. Or commitments. So in this case, we can like outsource the lending, or let's say the risk parameter decision makers to some AIs, which are then so they use AI-focused co-processors, and they can process a vast amount of data, which is really prohibitive on chain, and then simulate scenarios, predict worst-case outcomes. The benefits would be real-time responsiveness to market conditions, so like to be more quick and to like disable or like prohibit let's say toxic flow. Personalized loans, offer customized loans based on borrower's risk profile, so something like a personalized credit score, which needs off-chain data or compute, so self-explanatory. So here we can like also come to under collateralized lending based on reputation or something like that. Some additional use case, compliant privacy mixers, something like Tornado Cash, but also while being able to comply to regulations, automated rebalancing yield protocols, hyper-targeted incentive programs, and so on. Also, some interesting use cases are with Uniswap v4, which introduced these hooks. So, as you know, the Eigenlayer can add like some added functionality to these hooks, so they can run matching engines, batch transactions, run actions, access real-world information, which is really useful in this case, and so solve coincidence of loans to reduce taker fees, implement dynamic fees for high volatility periods, automatically adjust LP positions, create dark pools, for example, private orders, run auctions to reduce LVR, and maintain shared state. Also, one interesting use case is the use of FHE co-processors, which can enable some of these things, such as these, dark pools, so like these dark pools for swapping. I won't go into detail here, but Phoenix is leveraging Eigenlayer's restaking mechanisms. So first of all, what are FHE co-processors? They are companion processors offloading specific computational tasks from a host chain. So they specialize in maintaining data confidentiality during computation, so we can have like private data that is still stored on chain but is not really visible to anybody aside from the co-processors. I should also add that fully homomorphic encryption enables like operations on data that is fully encrypted and like doing operations on it without ever decrypting the data, so keeping it encrypted. And as I said, preserves confidentiality and FHE schemes. So, as we mentioned, like some applications and future impact, we went over these already. And for the end, I'm gonna have a shameless plug about our project where we tried out ourselves at the restaking paradigm. So we built, let's call it an eigen Bitcoin or a gazelle Bitcoin. So it is a bridged Bitcoin to Ethereum, a bridge from Bitcoin to Ethereum to bridge the native Bitcoin from the Bitcoin blockchain to the Ethereum blockchain. We utilize eigenlayer to secure it. We took the idea in the inspiration for 0x not gonna make it, and here's just a quick overview of the architecture. So in this case, we have the eigenlayer core contracts, and where the stakers or restakers would put up their collateral to, which would be like susceptible to slashing or rewards. We have two AVS services, which can also be one AVS services, but in this case, in this diagram, we have one that covers the Bitcoin to ETH transactions and the ETH to Bitcoin transactions. As we know, Bitcoin is not like a fully Turing complete environment, so we can't have like any. We can have some let's call them smart contracts or some programs, but we can't have any computation on it. So in this case, we implemented a Bitcoin multisig on the Bitcoin side. So it is developed in the classic Bitcoin script language. And when the user, let's say, wants to deposit, when he wants to bridge his Bitcoin from the Bitcoin blockchain to have an ERC20 representation on the Ether side, he deposits to the Bitcoin multisig, which is a simple like multisig wallet, which is operated by the operators of our AVS service. Once he deposits, the AVS that secures the Bitcoin to ETH flow checks as a kind of off-chain oracle if the transaction really happened, and credits the user with this, in this case, Gazelle Bitcoin ERC20 representation in any EVM environment, in this case an L1 or a mainnet Ethereum. The operators use the Bitcoin Light nodes to check the state of the Bitcoin blockchain, and in the case that he wants to redeem his ERC20 representation, he wants to go back to Bitcoin, to the native chain. He just burns his ERC20 representation through our contract, smart contract, and then the operators like check that burn happened, and they are tasked with emitting or like releasing the Bitcoin from the multisig back to the user on the Bitcoin blockchain. This scheme can work because the operators are like susceptible to slashing in Ether. So that's one of the considerations with this system, that the collateral which secures the Bitcoin is actually Ether in this case. It could be in the future some other ERC20 or like ERC20 Bitcoin representations. So they are disincentivized from stealing the money from the multisig. And also they need to reach a consensus when reading the state of Bitcoin and also signing the transactions on the multisig. And yeah, that was a shameless plug, and you can like follow our team on Twitter. That's me, I'm Kocha, and also TG if you want to reach out. Thank you.
Any questions? I have one.
Mm-hmm.
So when you were talking about this B-Eigen token, you mentioned it could be used to resolve markets for like prediction markets, like binary markets, like markets. How is this any different than the UMA protocol they are currently using?
It's actually similar to the UMA protocol. It's just
repeat the question to the mic.
Yeah, so this person asked, in this case, with the Eigen and the B-Eigen token and the forking, where the dispute resolutions are resolved with staking to either the A or B scenario. In this case, let's call it a binary scenario, where those who lost or where the option where consensus was not reached are slashed. If that is similar to the UMA protocol oracle, and yeah, it is similar. I'm not really familiar in depth with the UMA protocol, but it is a similar mechanism they are employing.
Anyone else? Dares ask a question.
Did you win any hackathon with that project?
Yeah. We won the ETH Belgrade hackathon first place with this project, the Gazelle. Inspired by the bridge over there.
I hear that's a really cool hackathon.
Yeah, it is.
You should go again.
Probably, yeah. We also invite anybody to join the hackathon next year. It's really a fun experience, yeah.
Thanks.
Yeah, thank you.
Any more questions? No? All right, feel free to stay around. Keep up the discussions about tapioca and ivy layer with some beers. Thanks for coming and see you next time.